All right, guys, let's get things going here. It is Wednesday morning, February 2nd, 2022. Let's get started with our pre-market analysis here. Yesterday was kind of a mess, right? Until the breakout at the end of the day, which seems to be somewhat of a common occurrence coming into the open here. And the 10-minute is just a little too zoomed out, maybe. But looking at this, we came in, the open was right at the highs of the day, well, the highs of the morning, got a pretty nice aggressive sell off, and then got a really nice aggressive bullish push back up, and then just kind of went back and forth all morning. And then eventually we did get the breakout just about an hour before the close and got whatever it was, I don't know, a 50, a 60 point push going into the close there. So didn't really have anything too sexy going on in here. We did have some scalps and some decent trade setups, still low risk, but a lot of risk going on in here. A little bit more of a high risk area, being that we were just chopping around. So I urge my traders to basically be patient. I know there were a bunch of different little trades I tried. A bunch of them didn't work, right? I was getting a lot of pushes and pulling back right to my entry, lots of break evens. So it was kind of a difficult morning for myself as well. Nonetheless, the market did come down and basically test right into our eye level here and hold it all throughout the morning, and then went ahead and launched out. And I think the sexiest thing was this pullback right to 74.50. So coming out of the open, I told you guys, as we come down, if you're short, we wanted to take profit just in front of 74.50 in case it held for a bounce. So just about a half hour into the open, came down, bounced 2 ticks below our eye level here. And that basically, if you took that trade, like I said, this level was expected to potentially hold. If you just took a trade there, you would have had 2 ticks of risk. And this guy ended up holding, never came back, and pushed almost 100 points just that day. And then in the overnight session has continued to push. So pretty cool stuff there. And I showed this picture to my members yesterday. Let's go ahead and bring that up. I'll just bring up the 60-minute chart really quickly here. If you just step back and look at all of the eye levels that we have on our chart here, we basically hold the back end of them and come down, work our way down the market, holding the back end either to the tick, within a point or two, or, sometimes right in front of it, comes down right up into these levels, fails. And then on the back end, on the way back up, we come down almost to the tick to 42.13. I actually added that in, so that's a little bit of an after the fact level, so I'm not going to count that. But we came up into these levels, which have been on the chart, held 42.60 to the tick, came up, and remember 42.12 was the level we expected to hold. I didn't actually add it to the charts until we came down into here and came out, so that doesn't count. But right off there, came up, pulled back right to 24.50. Okay, came up, pulled back right to 98. Again, breaking it by less than a point. Coming up, coming back down, coming right to 74.50, breaking it by 2 ticks. And now here we are, we came up, and look at where we're finding resistance in the market, right at 78.75, almost to the tick. I think it pushed to 45.80 there, and now we're pulling back, right? So we have 27 below us, 96, 74, 45, 15, 30, 43.98, 43.61, 43.24.50. It would not be surprising if there's a pullback to one of these levels. And remember, that's what makes trading a little bit more difficult, is we don't know which one's actually going to hold. But wouldn't be surprising to see one of these hold in a similar fashion to a lot of these other pullbacks. So let's go ahead and jump up to the ultra high time frames. We'll dial on down. And again, up here, really not much else to add to the picture. Potential, ambivalent. There's one thing I want to add to the 3-month chart. We did pull back. We did come all the way back up to where this candle opened on the 3-month chart about just over 2 months ago. So I believe going into December. So we're back up to where that opened. If we continue to push for the rest of this week and going into the rest of February, this candle closes at the end of February. This could end up becoming a green or a blue candle in my instance, becoming a nice green candle. and having a huge doji to the downside, and that could be a potential situation here. So if we close anywhere above where we are now, we're going to have a candle that's, a box up into there. So we'll have a huge wick down at the bottom end, a nice body, and that could mean we continue to push. I'm just noticing the potential bearish indication here of a lower RVI, even though we are pushing higher. So we got to keep an eye on that. Our monthly, again, not much to say. We're finally breaking above 50% of that previous super bearish candle, and we're coming up to 50% of the candle before that. So getting up through 46, 42 will be a good thing for any of the bulls out there. And then on the weekly, we already talked about that potential bullish reversal candle that is getting nice follow through. And from the zoomed out perspective, in fact, we'll probably see it on the daily as well. So I'm going to jump down to the daily here. We're pushing right up into that swing low that I talked about, right? So let's take a look here on the daily. The one thing I'm noticing is as we kind of trek higher and attempt to push back to the all-time high, we could make the argument that there is the start of a potential bearish divergence from the highs. And again, this is one of those situations on a high time frame that makes it difficult to really pinpoint, because we could continue to push and technically come all the way up to this previous swing high at, let's say, what's the actual high? 46.71. We could come all the way to 71.75 there, and we would still have an argument for a potential bearish divergence. And then if it went through that, we could still make the argument from this previous swing high all the way up at 47.39. So I'm just watching this. I'm keeping an eye just in case we do start to get other time frames agreeing and we see that bearishness. Maybe we could see a nice healthy pullback. What I'm looking at here, though, is this whole leg from the 42.1275 low up to wherever we push to. Right now it's 45.80 even to the tick there. That pullback, 38%, is right to the top end of the previous weekly range. So I'm going to definitely be watching that 36, 39 area if that does occur. But that's a little too far out. That's another 150 point correction, and I'll worry about that if that starts to occur. But I'm watching that potential bearish divergence up there. And of course, just from the looks of the candlesticks, looks like we are really strong right now. Don't really have any bearish signals from there. So we'll see. And remember, we talked about as we push back up to retrace the leg down, we had the 38 retrace, we had the 50 right there at 45.10, the swing low over here from 45.20. So we said we had the little 10-point range there, and sure enough, we came right up into here, had a lot of trouble, a lot of failures in that area. Eventually, we pulled all the way back, say 30 points, 20, 30 points, and then we started getting the chug higher into that new zone, which we're going to take a look at on the 4-hour. And now look at where we're finding resistance, pretty much at the next shaded zone right here, right? We said we have the swing low back here at 45.72.75. The 61.8 retracement is 45.80.75. And if we come up in here, that was a little 10-point range, maybe even 15-point range there, that we could potentially find some trouble. So sure enough, in our overnight session, we came up, and if you see on the short time frames, came right up to 45.80, so 3 ticks below the 61.8 retracement. And look at that, right into our eye level here. Again, just breaching it by 1.25 points, and now pulling back, came down. We held the next eye level for a nice little bounce, an attempt to come back up, and now we're pulling back right to our CP, getting a bounce, holding our VWAP, and pulling back. All textbook beautiful stuff going on. So let's go into our 4-hour. I digressed. And this is what we were talking about yesterday. We're talking about these blocks in the market where we see consolidation, again, potentially called balance areas in the market. And we said if we get through the chop block down here, we'll push up into this new area up in here. If we could get through that which was trouble, remember we pushed right to our expected area, our first area of resistance, got this major pullback, but then the bulls came back in, pushed us up, and now we're right up into, and let's see if I could, yeah, so there's the 61.8 right there at 45.80, 80.75. So 3 ticks in front of it, exactly off that swing low right there, So we're right at the edge of the next zone. So if the bulls, we might get a pullback this morning. In fact, a pullback all the way into that previous 45.16 area looks really sexy to me. But anything's possible. If we pull back and bounce and get through that zone right there, now we're pushing up into this next kind of, I don't want to say balance area just because it's a little bit more messy. As I said, as we get up into the top end of the chart here, it's not quite as beautiful as back here with the structure that I saw down here. But basically, the next area of local structure, we see it a little bit more in the last, say, month than we do from 2 months ago. So once we get through there, we're right up into this chop area. And then again, the 100% extension basically delineates the end of that zone. And then once we get through there, I think the top two zones are pretty obvious if you look at previous price action. A whole bunch of support and resistance from just around 46.80 to about 47.40. Again, very general levels. And then once we get up above 47.40 here, we are right up into the all-time highs in this next chop area, which does, in my opinion, look more like a nice balance area up top. So we have these zones above us. We have some general areas we have to get through from this 4-hour perspective. And again, just like on the daily, seeing potential bearish divergence arguments from the previous major highs that we are retracing back into, we also have it on the 4-hour. So if you go back to all these higher highs, the RVI is actually much lower than where it is right now. So we have that potential setup agreement on the 4-hour as well. So I'm going to be watching that. We are right at a critical level. So if it fails from here, again, being right into the eye level and 3 ticks in front of the 61.8 retracement, right in between the two KPs, great area for a failure. So I'm going to be watching that. And let's go down into the shorter time frames now and take a look at our 60-minute. You can see I have all the eye levels kind of just on there. Those are the only really levels I put on this chart. We're right at our 78.75. We're getting a pullback. And like I said, it very well could hold the 27, the 96, the 74, just like it did on all these other pullbacks right into these eye levels from before. So again, it might not hold one, but then hold the other. And again, you're going to have to manage your trades. That's what we're doing as traders. We're basically just professional risk managers managing risk all day long. So, make sure the trades that aren't working, you're getting out of, and then the trades that are working, you're, letting them run for nice 10, 20 point pushes. So 60-minute here, again, a bearish divergence up at the highs as well, agreeing with the 4-hour. And on the pullback, we might actually have some arguments for the bulls if they don't break this low here at 45.51. So if they hold 45.51 here in the next hour or so for that turn and that bounce, we'll have a nice bullish divergence on the pullback, what we call a bullish continuation pattern. So if that starts to set up, it could be a test of the low to the tick. They could actually just peak below it. We've seen peaks above and below our setups, and then it goes. Could be a possibility as well. So that's what I'm seeing here on the 60-minute in the most local area, the potential for a bullish divergence if it doesn't break 45.51. If they get through 45.51, which to me it looks like is basically the overnight low, maybe not. I guess the overnight low is 45.47, so just a few points below that 45.51 area. But if we get down below 47 here, it's right back into, like I said, we got the 27, we have 96, and we have 74 in the most local area. And I'm going to go down to my short time frame, my intermediate time frames here, and we'll look at what we're pulling back into here. So if the market cannot continue to push from where we are right now, and they can't hold again that 45.51 swing low, or the low of the overnight session back at 47, it's going to pull back into some of these other levels. And we do have a really nice resistance here off 45.41, along with a prediction point sitting right there. That's not a prediction point. That is, I actually don't know what that is, but it is lining up exactly where we found resistance. So I must have marked this level on the chart from weeks ago, and I guess we came up came up right to it and failed there. This is a 10-minute bar, so we came up into it, failed for about 10 points. It even came up again and kind of failed and pulled back and then broke through. So that is going to be important, even though that isn't my kosher level. That is sitting right there at 45.41. So that would be the first thing in the way on the pullback. So watch that, and then I drew a fib that I want to look at on the 30-minute here, and that fib is looking at basically the low of yesterday all the way to the high we just made. And it might actually look a little bit clearer if I put it here on the 10-minute. So let's take a look. I know there are a lot of levels. On my 10-minute chart, I have everything. I have the minor eye levels, the major eye levels. I have both kinds of prediction points. And then, there's also retracements and other stuff. So you're going to see a lot of levels, but let's go ahead and draw this up right up to 45.80. And as you can see, the 38% retracement of this nice leg in the market here is right to 41. Again, maybe a little bit of a range. For the actual swing high is 41 even. That line is about a tick below it. So from, I would say 41, maybe to 39, a little 2-point range potential for that hold. Breaking through that, never know if that CP, really strong level in our prediction points, holds. But I'm also looking at the fact that my eye level, which we know also works just as well as the prediction points, is exactly to the tick the 50% retrace. Right, so I'm more so looking at the 38, more so looking down at the 27, and then the sexiest thing is the fact that the 61.8 retracement of the whole push is right back to all the resistance we had from yesterday. So this level right here, and it might again be a range from about the prediction point at 1250 right into 1450, so a little 2-point range here. That to me is the sexiest level for us to pull back and hold. But again, anything's possible. So again, 51 is that swing low. If we hold, we'll have a nice bullish divergence on the higher time frame. The low of the overnight was 47. If we get through those two levels, it's opening up the 3 levels I just mentioned. And then keep in mind, like I said, we have some intermediate levels in between there. And these levels are just as valid. Even though I like some of these, the more typical generic retracement areas because they line up with some other things I'm seeing, doesn't mean that the market's not going to come into one of these other levels and find some support and never come into some of the other levels we just marked. We just don't know. Anybody who tells you the market is going to, let's say, come down to here, come up, find resistance off the back end of that support, and come down to 27 and go from there, they're lying to you. There's no way to know that that's going to happen. That's a possibility, but there are also so many permutations. You could sit here and draw a million different. You could come to 51, bounce up, come down to 47, come off the back of 51, fail, come to the magenta, come up to 27, pull back to there, and go. Right? There's so many scenarios. Rather than trying to look at a million different scenarios, let's just look at where in the market do we expect there to be interaction, and if we have a good setup. Again, we do like to use some other signals as well. Assuming there's a good level with a good signal, you might as well just try it, right? So this morning, I think you guys got the picture here. We pushed into our expected area of resistance. So it's your guess is as good as mine as to whether or not the bulls are going to jump in and just go ahead and chug right through that level. So there's 2 scenarios. The bulls jump in at some point, right, on the pullback for the push through our expected resistance area, or the bears are going to hold from here and sell this sucker off, or it's sideways, right? It's just kind of choppy in here. And there's a million permutations. So we'll just see what happens. But remember, zooming out to the bigger picture here, we are up at our expected resistance level in this box. So getting up through here opens us up basically all the way up to the 100% extension of the previous weekly price action, which is about 46.80. That doesn't mean that we have a target to 46.80 and that's where the market is going to fail at. They could fail from there again because I think that's a pretty good area to expect that, but it could just continue to go as well. So this morning I'm watching our highs to see if we can get through there for the bulls. And then on the other side for the bears, I'm looking at some of these deeper levels for targets. If they really jump in with that strong bearish momentum, we'll get in off the back end of one of our levels, get short, and then watch the levels we have below us here to take some profit at in case there is that bigger bounce. So that's where I'll leave it for this morning. We're going to jump down to the short time frames here, see if we can't get some trades out of the open. And just before I leave, I want to once again just point out how well all these levels they come together, prediction points, eye levels, and our 200 and our VWAP. They just work so many times over and over again. In fact, if you just short the VWAP as we broke through to the back end, a textbook trade setup that we talk about in my trade room, right off of our previous resistance right here, our previous support level, that's a great trade. You would have been up just about 10, almost 10 points here before the market has even opened. So have a great day. We'll be back tomorrow as usual.